The Canadian dollar is strengthening against several of its currency counterparts in the middle of the trading week, despite the federal government recording its largest budget deficit in more than 70 years. The loonie is primarily benefiting from a falling U.S. dollar that was affected by a broader market rally. With crude oil prices testing $41, the loonie may turn out to be one of the best performing currencies in the second half of 2020. On Wednesday, Prime Minister Justin Trudeau and his Liberal government unveiled a 168-page fiscal report that shows the federal deficit is forecast to hit $343 billion this year, the biggest level since the Second World War. Although it offers a short-term economic preview, the government documents fail to offer any long-term solutions to the debt or deficit. The national debt is expected to top $1.2 trillion. Finance Minister Bill Morneau told the House of Commons noted that the cost of Ottawa's actions is enormous, but the cost of inaction would have been far greater. Some will criticize us on the cost of action, but our government knew that the cost of inaction would have been far greater. Those who would have us do less ignore that, without government action, millions of jobs would have been lost, putting the burden of debt onto families and jeopardizing Canada's resilience. The snapshot also revealed that the federal debt to GDP ratio is projected to increase from 31% to 49% in 2020-2021. The COVID-19 economic slowdown cost the federal treasury an extra $81.3 billion as the economy is forecast to contract 6.8%. Overall, the government thinks the economy will bounce back 5.5% next year. Later this week, housing starts and employment data will be published. The market is penciling another increase to housing starts, and about 700,000 new jobs in June. Rising energy prices further lifted the loonie midweek. August West Texas Intermediate, WTI, crude oil futures jumped 26 cents, or 0.64%, to $40.88 per barrel. Crude prices continue their ascent after crashing to below zero this past spring, rallying more than 35% in just 3 months. Since energy remains Canada's top export, any significant price change, high or low, can impact the currency. The benchmark 10-year government bond rose 6 basis points to 0.575%, while the 30-year bond added 10 basis points to 1.098%. The USD-CAD currency pair tumbled 0.72% to 1.3507, from an opening of 1.3604, at 1911 Greenwich Mean Time on Wednesday. The EUR/CAD fell 0.2% to 1.5307, from an opening of 1.5340.